And away we go on a Thursday, everybody. Book giveaway Thursday. Hey, Neil Ward, you were the first one in. So the first person in on Thursdays, you're going to be the first winner. What you need to do is jump on the Discord, contact Miss Stephanie, and the best way to do that is go to harmonictrader.com, become a basic member. Simply by clicking that link, go to the basic members page. And then the Discord link and all of your resources are on the single page. Click there. Look for Miss Stephanie. Miss Stephanie is her username. And send her your information. We'll set you up. Congratulations. We'll give away 2 more books today. How's everyone doing? Great to see everybody. There she is. Hello, Miss Stephanie. Everyone else, Bob, how's it going? Dave, of course, David, Paul, Bishal, Grifflet, everyone else. Thanks for showing up today. Let's get it. Let's just get to it because, markets are down again and doing full return mode quickly. Full return mode is already halfway there. Full return off of something like NASDAQ takes us all the way back down to a test minimum on the futures 11.5, kids. We're full quick. Let's just get some perspective. And the full return mode, here we are, we're back at level 1, but we're actually a type 2 off of this. What we're really negotiating here is this is target 1 of that prior pattern. We come back 11.5 on the NASDAQ futures. You're still 12,050. You got at least 500 more to go on the downside before we even start to look at this as a possibility for a type 2. We're seeing it in Tesla, Microsoft, Apple. Pretty spot on with the return here against those bullish phases, bullish reactions. Remember Tesla, it's a weekly phenomenon, and it's going back to retest its bat pattern. That was pre-split, remember that. Now we have the full split, and what the split do? Nothing. Oh, come on, what's going on? Why is this taking forever to load? Not sure. There you go. There's the daily. The daily had a crab pattern at 311. Pre-split was 900, but it's really all about this weekly if I can get it. There you go. This is now it's full on. I mean, here's the Tesla, and we were talking about the 3-day breakdown on the weekly. That's right there. That's your reaction, type 1, target 1, and then we did the reversal, broke the trend line. Folks, talk to me at 208, please. 886. Let's just rip through these big boys because it's all tech. Tech is leading us lower. That's why valuation is going to come out. More interest rates go down. Daily time frame for Microsoft. Here's the thing. You had a lot of beautiful patterns at the end of June. And this was a crab. Some went to target 1, some went to target 2, but now you're back into full retest stage. You're 256 on Microsoft. Wouldn't even think about it till 241. And hey, could we hit the hop level on this retest? Of course we could. It's all about how deep this thing and how hard this falls into that range and what HSI does. And here's something that we need to look at. Why is this so severe? Because look at the expansion occurring where it should be turning. It's not doing an inflection, like a quick impulsive inflection, a 3-4 bar thing. This is expansion. That tells you still down. This is going to stay down many more bars, many more days until I say 241.60 is a minimum 1618 to qualify as the end of the return minimum. That's where we're at. I mean, we've looked at that in Tesla, Microsoft, Apple, a little bit different. But now falling off of that, the crab, I mean, it was a crab or a shark. Okay, back to back. This one already, I mean, hit the hop exactly. 175.58. We've talked about the 175 level. I mentioned it a month ago in the monthly report and some recent updates that 175 on Apple was huge for not only the stock, but the entire market. What's it doing? A complete rejection. Talk to me when we get back to 131, folks. All of these June lows are just ripe here, starting to fall apart now. Also, we look at Apple. Again, why HSI is such a nice indicator where it's giving us the severity of this move breaking down. You go below this low on Apple, that should give you a larger continuation. Still a ways to go, but you're negative. You're under zero. It's pretty deep already, and you're not abating at all. This is, complex stuff. Not what you wish you were sitting there sitting at a retest, but no, this is actually just getting going. It's a tough one. Tesla, Amazon came all the way back down. I mentioned I sold that a while ago. Caught the quick bump up and then came back gap filled. It's gap filling. That was another crab. There's a couple of things down here. I think the weekly is a little bit better for Amazon. Wasn't there? There was something down here on the weekly. Down as low as what? 103 is the last HSI signal. Not a heck of a lot going on, even constructively bullish wise. So ugly charts, kids. These are ugly charts. If you are looking for some kind of turnaround, it's not happening. Not yet, at least. We need to do some major type 2 returns, kind of resolve what is happening here. Hold on one second. It's critical. Okay. One or two more. The semis. Let's take a look at Nvidia, stock of the day, getting crushed. Here's your weekly chart on Nvidia. You tell me. You tell me what's the critical point here. It's a massive ABCD. Another takeaway as well. Beautiful weekly pattern. No confirmation down here. You just got a reaction and come back and retest the whole zone. That's hop level 131. Wouldn't even think about it until HSI comes down, amplified. These are all, it would need to hold 130. Okay, and if it breaks it, you close, you don't trigger on Nvidia. Look, this is where the larger expansion of this bear market begins. Under 130 on Nvidia and with a lot of the chip stocks too. What you're going to do is, and what I think we have to start targeting now is the full 886 across the board. Nvidia, okay, this was a $14 stock, no, $4 stock about 5-6 years ago. And I'll get to that history in a second, but 886, your COVID low is at 63. You're at 133. You're not doing anything to say that ABCD is going to give you maybe a reactive bounce. There's no confirmation there. Beautiful structure. I think we've been saying that a lot. Nothing there. This is it's a pretty steep breakdown too. I mean, that's just get my butt kicked kind of a breakdown. Not to mention, let's look at, say, your monthly. Look, we've been here before with Nvidia. You got to kind of go back to the early 2000s. This will skew. It's really tough to see it when you look like this, but if you go back to, say, 2002, 2008, look, I want to show you this cycle just from a cycle perspective. Forget that that's $2 split adjusted back in 1999. What you need to just remember is that cycle up, come back, okay, form a nice peak, and then come back to the 886. Cycle up, retest down, come back 886, 153. All right, each cycle, 5-6 years. Now what about this one? Another 886, why not? We've seen it many times before. It repeats. And once that cycle busts out, it's kind of like this. 886, 63 bucks, $67 off the COVID low. This is the problem. If you're bullish or we're looking for something, which, hey, I'm looking for something. I'm looking for like an Nvidia to come back, retest something, but it does stuff like this. Major gap down, breakdown under 140, follow through. Blue lines flashing a big crab pattern all the way down there. That's not right. That doesn't work. That's not what I'm looking at. I'm looking at big 886s. $63. $63. Say it with me. 63. Yep. Here's another one. And I said all along, let's watch the semis. They're going to give us the key to what happens here. And Applied Materials, same deal. Weekly time frame. HSI generated. Oof. Okay. What's the 886 off of these? 886, go back to the COVID low. We have to embrace it. Have to embrace this reality. Kind of looks like that. 52. You're at 89. This is an example of where there is plenty of time. If we're going to capture the big downdraft, yeah, it's starting now. It's starting with these kind of failures. Microsoft, again, let's just want to quick go back to that because that's the biggest one. You get Apple and you get Microsoft to drop lower, which they're starting to, with both of them have this kind of development. Microsoft, again, full return phase. Today, new month, new day, new week, of every week being down. Your weekly candles look ugly. Your monthly candles starting off horribly. We're going to close tomorrow on the week, and it's, last week was the 3-bar breakdown on your weekly level. This week is the continuation. Nothing. There's nothing until you come all the way back down and register again. So Microsoft's another one where 242, all of these are, 8-10% lower from here on this move now. Hold strong, people. I will target opportunities, but they're way down here. If I wanted to get long, if I wanted to buy Microsoft on a big discount, it's at 221. That's it. That's it. So we have to stay patient with this stuff. It's a whole lot of stocks that, forever things that you would want to get that are not doing it in the tech space. Here's one or two more that I'm looking at of like things like SAP. These have been high-flying stocks in the past. And you go there on, say, your daily weeklies. Whole lot of patterns trying to scrape the hop level. Look like they're going to fail. And any close under these lows, you're done. SAP, I think the weekly's clear. Yep, there you go. Weekly, SAP. You tell me. Hits the zone. Is there any confirmation? Nope. No HSI. Nothing. So an HSI is clearly headed back down as the price action waffles in that zone. You don't concern yourself until something develops to the right of that, and it's not happening. The other one, Salesforce, another big high flyer. Typically, you'd want to see patterns like this and take a big whack at those, but nothing there. Wasn't this a weekly crab too? I thought that was a weekly crab. It was a monthly. I know this had something big there. A monthly HSI, maybe a check back, but hate to do that. Hate to keep like fishing for stuff. That was the other one. One more. What was the other one? I think it was like VeriSign, one of the old ones. Daily, weekly. HSI deeply oversold. You were seeing this in a lot of them. This might have been a weekly, but they're all oversold. They're hitting oversold. on the dailies, languishing. Weeklies are rolling over after a couple of HSI signals. So nothing there. Nothing there. Really quick, compare that to say something like, oh, I don't know. Here's an oldie but goodie, Coca-Cola. You tell me. What's that doing, folks? Bullish bat pattern, reaction up to target 1, target 2. I mean, that's the termination of the reaction right there. Despite all the extra move, but now's the trend line breakdown. Come all the way back to 58.61. If Coke and Walmart and Target and these real sleepers, you know, the Buffett styles are going to go into these kind of full return modes, what are we going to do? We got to accept it, and until it gets down there, you got to just let the return happen. Sure, I'd love to get some Coca-Cola and hold it forever. Why not? Buffett did work for him, but not until 56. Okay, a lot of these are lining up this way where, you know, it's big stock, industrial, tech stock, maybe a bank. Here's JP Morgan, couple of patterns all the way down here, like shark patterns, a small deep crab. All of this around 109 to 114. It's something that I was lining up a couple months ago. I think on the weekly, there's something here. Just the HSI. But I'll tell you what, you fail, you close under 106, 105. Not only will you fill the gap, but again, like the rest of them, I think you don't even second guess it until, or wait until the 886. I mean, there's nothing, even if you come back and fill this gap, there's nothing here. You fail that prior low from end of June, you go from 106 to 87 in a heartbeat and still don't form any pattern. There's really a lack of construction. It feels like April again, and we know what happened from April to June. So are we going to go September, October? Maybe. Yeah, let's really quick. We'll look at that SPY, because SPY 2, you know, all did type 1 reactions off of those mini patterns. And what are they doing? They're just bypassing everything. SPY on the daily, bat pattern. Gartley, actually. Come on. There you go. Bat pattern. That's right. Let's blow it up. Now, there's a couple things going on here, but there's the bat. There's confirmation. And so 393, there you go. We're target 1. We're under target 1. Target 2 is 381. HSI has rolled back into the zone, so that's failed. That signal, you know, we were already suspecting it failed, and now you go back into the zone. That failed, and also the reason why it failed is look at amplified, just expanding. Nothing to confirm. Never came out of the zone, and you're expanding. So target 2, 381. That's 10 points higher, easily another 3% lower on this move. 3% lower is another 100 lower on the S&P. And you're coming back and retesting the shark. Ugly shark, but it's a shark. Really close. I mean, it almost hit target 1 perfectly, almost exactly. The high was 431.73. Target 1 was at 432.56. So close. I mean, so close that it's, you know, I'm not going to try to fudge it and say, oh, that was a type 1, but real close. But at a minimum, with this kind of return phase, I'm going to look for the full retest of these bullish patterns. 371 is your 113. Hop level 357. If we fall out of bed over the next few days or in the next week, that's where we head to. There's nothing but air now. There's no confirmation yet. Nothing came together. And this reaction off the small bat back into the zone, turning into a sharp return phase. No doubt. Anything else that has stayed up for any length of time is right back down. I mean, remember PayPal? Remember we were looking at this little tiny shark pattern on PayPal? Yeah, this is just now trying to break down. That shark holds target 177. You're not going to escape it, even though this thing's been so devastated. Like the rest of them, they're going to have to do some retest of your June low. Apart from the stocks in the downtrend, what's an indicator that signals recession incoming ahead? Well, the fact that your monthly candles look like garbage. I mean that. Let's go back to the SPY quickly. It's a great question. What are the harmonic signals that say recession imminent? Well, go to the SPY S&P 500 and clean up that chart. Look, that monthly close with the wick and the candle that happened basically in the last 5 days, maybe the last 10 days. To me, this candle from August is one of the biggest failures since the whole bear market started. The fact that you could not close above the prior 1, 2, 3 signals, that 430 level, 4,300 on the SPY is now firm resistance. And I mean firm. You affirmed the breakdown as well, the downtrend. I mean, there you go. It's a tertiary touch of the downtrend, and your close is below these three important areas around 412, 410. That's really where the SPY had to stop if this was going to be constructive. Otherwise, yeah, there's something maybe we need to look at. We know a lot of those daily charts are pointing lower in a return phase that they have to go back and retest, but even stuff like that simple monthly reading looks like it wants to come back. 371 retest, not last month's low, but the July low. It is not. This is another situation just like April, where I was kind of screaming at the charts at the end of April because they were in just an ugly position to continue lower, and there we are. Here we are again. Minimum levels, minimum retest patterns have to be realized. That will bring about the type 2 reversal possibilities, but they're all lower. They're all lower. And it's the throwdown from the last few days, I think, is really signaling you've got a lot more work to do on the downside. You're nowhere near. I mean, you're throwing down 5 days in a row now. This is day 5 since last week. And then really in the last 10 days, it's pretty much straight down. Pretty tough. I'll look at gold. Not much to look at, but I'm happy to entertain it. I think what I want to really talk about, what I need to talk about are interest rates. Because I mentioned that on Monday. Interest rates continue to be inverted, and as long as that goes on, the longer that goes on, that will have to create problems. That will create problems for the market. Here, gold's down. Gold's been like a nothing for a long time. 1807. We were saying basically target 1 at 1897 and 707. 707 here on the downside. Excuse me 1 second. So that was in, failing this, and then probably the whole bull market on gold is over underneath 1700. A close underneath 1680. You got nothing. I mean, this is where things can crap out. You're there. I mean, here in a weekly, couple back-to-back patterns, but no confirmation. You have this bat pattern. Did it hit target 1? Came close, but didn't hit. 1824 was the candle, but didn't hit 1831. Still, we would say a type 1 here. Where's confirmation? Nowhere yet to be found. I mean, it's nowhere. Keep an eye on that, but 1695 or threatening maybe a full hop retest 1621. There's no confirmation with these bullish structures, and this is what we're going to look for when a lot of those stocks go back for the full retest? Are they going to express an overbought condition, or is HSI going to be in the wrong spot and signal a failure? Gold has been a dud for since the top, since that deep crab around 20,000, sorry, 2068. No double bottom. There is an HSI buried in there. It's tough to see. There was an HSI. I think the signal's on top of it. Hold on. Let me blow this up. HSI did trigger. Looks like the terminal bar is covering it. But all of that's lower. It's still $20 lower to check back. And it doesn't look like it's, it's doing much. And you go to the monthly, which is kind of the thing with across the board. Most of the patterns we're seeing are monthly, weekly, longer term, not so much daily or even 4-hour charts. Big levels that are failing. And look, gold never broke out above the initial peak, and consider that a B point at 1675. Where if you do that and you break that B point, then you're in the ballpark of starting to basically complete some kind of larger 886 of that whole range. Is that over? This whole run could very well be over in gold if this thing breaks down and fails all of those patterns and support levels. That would be it. It's, pretty much crunched into there. And that's a monthly chart, folks. So, since March, you're down 6 months in a row. You might have listen, I'm trying to show some longer term levels. You might have a short term opportunity here with getting a reaction, but you have no confirmation yet. How many of those have we seen where even if you get a move without confirmation, it's just small reaction? That may be something like that and then back down for later. But that's all we have. Nothing is really lined up yet to suggest you are in that spot with confirmation, confirming your prior levels that for gold that says anything's going to develop anytime soon. No, it's just continues to ride this downtrend that started back in March, 6 months down. Same with the S&P, same with the NASDAQ. Look, let's go over to crypto quickly. The chart is Ethereum. And Ethereum, I was saying this last night, Ethereum had to get above 605 with a close above 605 to have any kind of a 3-bar, whatever. This is it. Look, everything in the crypto space comes down to this extremely tight range. That's your check back point where if this secondary HSI is supposed to yield something off of this larger zone, that low has to hold. Now that low has to hold, so you go from 1430, basically 1480, you break 1480, you close under 1480, you do a full retest of the zone from here, and this fails. And here's the other thing. We did get HSI above the 50 level, but you need to see individual price action do something, follow. I would have felt a lot better if you had a bullish close, some kind of follow through. Nope. And it could very well be that the larger markets, the NASDAQ, the tech space, the fact that interest rates continue to pop, the dollar continues to pop, continued pressure going to take more time. So then that puts us maybe towards the end of the year. We were looking for some retest towards the end of the year. I would think this waffles in the best case scenario under these levels. Check back fails, you're done. Under 1430 or 1480, really, you see that in the next 24, 48 hours, certainly by Monday, it's over. And you're going to grind probably most of the end of the year back into these lower levels. Bitcoin, amazingly on the continuous futures, trying to hold that 19.4 level, but same deal. Look, Bitcoin had First confirmation there, second confirmation there at 20,800. It checks back, it fails, it waffles. You can basically say any kind of close under 19.6. You're 19.7 right now. Here's the other problem. We've talked about this. Amplified's going back down. That's a bad sign. This thing should already be above the 50 level, and we're 4 or 5 days into this already. This is early signs of a dud. I mean, these are all signs of a dud. Set up in the right place, check back, give us everything we want, then just go sideways for 4 or 5 days, 5, 6 days. No follow through the upside. You're, already in the ballpark of just saying screw it, scratch it, step aside, let it flush out, because that's under there. That's it. You couldn't couldn't have any kind of a close last night. In fact, they sold it closer you got to the close. All of that's an issue. All of that is an issue. And I think it's going to do, maybe more of the sideways action that we saw several years ago. That was required at a minimum. You go back and everyone wants to cite go back to 2020, 2018, whatever. Look at those markets. Let me get you guys there. Yeah. I mean, these are the two bat patterns I've been looking at the whole time with these major structures that were generated. And a secondary confirmation should explode something like that. But here off of was December 18 lows, yep, into 2019. Not even doing that. Ethereum might be the better example of just going sideways for a long time before registering anything. There you go. Could be something like this where you came all the way back down. Here's like your first 1, 2. There's your second indicator on Ethereum. This is 2019. That bear market that bottomed, and it still took a year. It triggered and it went sideways. That's what could be going on here. Come back, we trigger another. We got to come down and trigger another one, and we go sideways down at these levels, like you did back here in 2019. If you're not going to do it now, you're going to take a lot more time. And I, hey, that's not what I want to see, but that's what's going on. And even if you've got a bearish HSI signal pointing down since last week, and much like you did up here. You go back to 2018, 2019, that's kind of what you're looking for. You're looking for some stabilization. You're looking for this, same type of deal. You're looking for the thing to complete the breakdown, get to the right of the downtrend, and then form it. I think it's probably something more like this. Where you go what, 75, 80 weeks? And so then that sets us up for this kind of a thing. Stay in this zone for a long time. Go all the way from the initial low. 80 weeks that's half of it. Well into next year. Well into next year where there's something like that. January 24. Are you kidding me? And you still haven't broken the downtrend with all of this, where this is, each bar, all of that. You have a lot of work to do. It's not what you want to see, but again, that can grind for a while and take a lot of time without a lot of enthusiasm before you get any concrete move out of here. If it's not going to do it now, it's not going to do it. That's what I'm saying. And it fails literally. Yeah, do a 3-bar candle or even a 2-bar. There's any failure of any of the prior day's lows, and you've got all the conditions for this to come even just back into the zone. The hop level at 1273 is an easy stretch. It's going to take more time. And you could still waffle in this larger zone here for many more months until you maybe come back down and then come out like that's November. If you're back down at 1273 come like November into December, that's the kind of thing you're looking for. But it's September 1st. And that's next 60 days, brother, is going to be where the relative position of this thing and its inability to respond from this HSI point is devastating. It's devastating. It's really, you have to see something go on here. Otherwise, you just step aside, because 1429, you might as well put 1279 or lower. Yeah, I agree with you guys. A lot of comments here. And with a lot of the returns that we're looking at on those tech stocks, even the big industrials, they're all setting up. They're all setting up for this to kind of finish it off, take its time, go lower. And the total index, crypto index, that those reaction on, say, total 2, total 3, the bat pattern, all of this little stuff. Think of it as just going to take more time. Bullish pattern to a bearish pattern, back down into the type 1 reaction. Look, everything you have is there for the completion of the reaction, but it's not responding. If anything, you go under 543 for total, what's that, total 2. That's without Bitcoin, and that's been the stronger of the two. Then you're probably going to hit target 2 at 524. It's 10% lower or more. Here's amplified. Can that get out of the zone? Double test. You had a double bottom here, and you have no price action response. This is why every day is critical. So if we get to the close tonight and another bearish candle, it's about it. I mean, last night for me was about it. You couldn't post a bullish candle last night. Sit down, son. Sit down. Here's total 3. Same deal. This one's sitting, amazingly, it's at target 2 now. We were thinking, oh, yeah, maybe do a reaction and then come back for the reversal. Do the target 2 return. Like from there to there, not happening. You check back on HSI. You have everything you need to see to end this reaction except for the trend line break. And again, under target 2, close under 371, probably gets this thing moving lower and longer until maybe another bullish pattern or whatever. But in that time, it's going to take time. I would wait for that breakout. Wait for that breakout before I even come back around warming up to this crypto slop. It's just, I think there's this looming malaise, and I talked about this a year ago, and I had a feeling, mostly because of what happened I won't even say where, but it happened a year ago. Made just about every American want to puke. And we just don't have an environment, folks, that's friendly to markets. Let's look at the interest rates. I think this is, for those, most of you don't look at rates, but we need to. We need to look at the 2-year. We need to look at the 10-year. There's big patterns. Here's the 2-year. Oh, 351, not stopping. Okay. And that's above your 10-year. That's 2 years is 351. 10-year is what, 325 with a bat pattern. And what's going on here is that you had no confirmation. You tried to come down in a target 1 and it didn't do it. And now you're headed back into the zone immediately. And this really started about 2 weeks ago, but now we can just gun the hop level at 366 on the 10-year. your 325. You got to hit that hop. There's nothing coming up there. And look, HSI, nowhere to be found in this zone. But now it looks like it wants to make the run. So rates are going to bump up. What? 30 for 35 basis points? Now? It's tough. Could there be an argument for a bullish Gartley if anchoring the lows from X on the June lows? For what market? Marbob 6. What market are you referring to? Because you've got inversion, okay? Massive inversion, 10 over 2. Hey, if I'm going to put my money in a bond, am I going to go 10 years for a lower yield? Or am I going to go 2 years for a higher yield? That's the problem. I mean, those are fundamental issues I think any market person knows is not the right condition to flow money into the market. If your 2-year yield is above your 10-year yield, money's going to go there and instead of going in the market until that changes. It's to be regarded and then get some perspective, because we had some interesting dynamics on the monthly chart. Remember this? Deep crab on a monthly on your 10-year yield at the bottom. Pretty remarkable. Look, there's type 1. Notice that move didn't get it. That's target 1. Went into a type 2 return all the way down under the hop. And now you're back up. But target 2 on this one comes in at 392. All of those levels look like, that are pointing higher for now. Says that, okay, what's the trend of the market? Because as those go higher, market continues to go lower. All of these are stacking evidence on factors that are going to pressure the market lower, especially knowing those major stocks are in those return phases. They're in daily return phases. Most of them have their target, the type 2 levels where it needs to retest below June lows. So this is falling like a rock to go back and retest those June lows. And this is an example of what happens when you get into that return phase. Here you go back to June 18. Once that hit target 1 and started coming back, okay, you're targeting the hop. You're at where? You're at what? What's that? 307. When you get back into that hop phase, you're targeting 0.93. The argument is for Bitcoin on the monthly. Look, I think all of them. I think what you're seeing is that interest rates are crushing valuations. Mostly those valuations, or extreme valuations, are in tech stocks. And then you kill, you kill the settlers, kill the pioneers. What's that? There's a saying. Pioneers get slaughtered, settlers prosper. So you're slaughtering the pioneers, basically your reaction phase. But then when you have to go back to the retest for the type 2, all right, that sets us up. It's kind of like an automatic process. It is an automatic process. That's how we treat the framework. Yeah, the BTC hop is at 87.30. That is, but our 886 is our 886 on BTC is 11K. And that's what we talked about for long ago. I'm just saying, in general, this return phase that you've entered about 10 days ago, maybe a week ago, in earnest, is now rushing to go back and retest everything it needs to. At the same time, you've got things like the dollar and bond dynamics continuing to explode that all work against the market. Here's dollar index. All right, fresh highs. We know that could go higher. We know that there's some major things on dollar index where we said this a week ago. Look, you hit 110 today. Amazing. The monthly chart, until we have some things here. Shark pattern up there. But until we get HSI to register, which is still expanding in the zone, all three of them are. And that's all you need to know. You're months away from the dollar index doing any kind of inflection down. It would have to have a major reversal to do so as well. So is that going to stop on a dime? Not with that kind of action. 117.98 off the shark. That's target 2. Not a surprise. Would not be a surprise to see that trade as high as 117. Even the quarter, we had some big patterns, I know. Quarterly, same 886. The weekly pattern, I think there's a big crab or something up here. Yeah, I think 118. I mean, you're going off that shark, 118. Whatever triggers first. So as long as dollar can't even give you a monthly reversal, yeah, remarkable. And again, stuff like dollar yen. Remember that chart? That was the one that had some big monthly dynamics to it. Hold on. We looked at currencies for the first time in a long time about 2 months ago. Yeah, here it is. It's a rather long crab pattern. Oh, geez, 198, trading 140 now. Where's it quarterly? Yeah, this is a great one. Quarterly dollar yen. You tell me. Beautiful pattern, beautiful structure. Oh, but it took what, 20 years before it, or 25 years before it finally decided to break out above the range? Yeah, it happens. Can this be relevant for where we are now? Yeah, it can be. We can just say that's type 1 reaction. And on the long-term basis, will continue higher month over month until you get up to target 1, which is 168. That's 2,800 pips higher. It's absolutely, that's how severe this is. This is also, even if you were to go look at your static 20-year ranges, you just broke out. You're breaking out of these candles. You're basically generating the highest close. You're trying to break out above that prior resistance at 140. You are, with closing on the quarterly basis. Okay, almost at the high last quarter, and now you're just pushing new highs for this quarter. I have a month to go. Anywhere above a 139 close gets you to where you need to be to say, okay, this will not stop until 168. 30-bar rule wasn't validated. It is. Look, 30-bar rule, it's funny that you say that. Okay, there it is. I mean, there's the completion of the pattern. That pattern completed at 115 all the way back in 1992, but you got overspill that took you into 1995, and then you retested that 15 years later. But still, I think we can all see the dynamics at work here. Take it for what it's worth. You're breaking out. There's only one target left until I see HSI, say on a weekly or monthly. I don't know why the quarterly wasn't showing up. Yeah. I mean, that's just amazingly strong. Meanwhile, you've got the euro, and I said this 2 weeks ago. I think 90 is easy. You're trading. You're under 100 now. You're under par. But remember the monthly charts here. Okay, nothing but I think the 886. We're failing that ABCD pretty clearly. It hit it. It's not, no reversal, no reaction. I mean, 91 is the 21st century 886. Think of it that way. And look what's happening. Even if we were going to consider that ABCD as a valid structure, look, terminal bar completes. What happens the next bar? Down. No confirmation. No confirmation. And here it is. HSI deeply oversold, another month, actually moving lower. That's probably 2 or 3 more months away from even being able to get out. It is absolutely the dollar surge is, another factor on crypto because those are all dollar backed. BTC USD, that's what that is. And so if the dollar is going to keep moving up and pressure against BTC, it's all the progress BTC in the world could make is going to get eaten up by the simple fact that you have a vastly higher valued dollar than 2 years ago. And it's changed tremendously. It is just look at what dollar index, just 2 years. All right, 2 years ago was there, 92, now 109. That will put a lot of pressure on the likes of Bitcoin and others. Let's go back really quick to that other platform. So if we're going to get the major move or major breakdown, if we're going to get a spike in rates, which I think we are. It's going to happen here, and it's going to happen above 330, where your 10-year yield probably goes up to 390. Your 2-year yield goes to 4, especially once they start doing more rate hikes. And here's the other thing, just based on the structure, look at the long-term structure, okay? Let's connect some dots. What's the last relevant resistance? Really here, because that's been violated. And I said this before, and I do think this is if we're going to connect the dots and just make a basic assumption of what this structure is, it's a shark. Your 886, your 1618, all of that is as high as 479, folks. On the 2-year yield, you're trading 352. Just put that stuff together. If we've seen the markets go down 20%, 30%, when you go from basically 0.2 to 3.52, all right, the next leg, especially breaking out here and go to your 1618 to as high as, call it 480. It's a shark going to make a run at 5% on your 2-year yield. That's the problem going on here. And I definitely think that there's no abatement of the pressure that we have seen. There's been no response at the critical levels that we are looking at. And then your daily time frames, the likes of, say, your, everything, Microsoft and Tesla and all those just real rich stocks that did so great for 10, 12 years. It's over. And it's over now because we're in that return phase. Microsoft is probably considered one of the safest places to be in tech. Not with this return phase, not with these last 7, 8 days. That's what's pressuring. That's why crypto's not doing anything. That's why the other markets continue to fall over day. And again, we're getting into tomorrow. Should be an ugly close for the week. Start your month out real nice. And stuff like Tesla, which is, there's only a handful that you need to look at. Tesla's certainly one of them where they're going to be selling Tesla. They're going to be selling all those other ones. So meme stocks and all of that, until you come back down for the full retest on something like on Tesla, again, 208. A lot of these are 20% lower. Here's that ARC. Okay, this one, I expect this thing to be completely busted out. Here's a beautiful pattern that we started talking about, but no confirmation. This is one of the issues that we've been dealing with for a while. Go to the daily here, or even the 2-day. Okay, we just rolled back into the oversold zone across the board on HSI on the daily, on amplified, and at this point, we have to go back to treating all of these like a brand new stock, where they need to go retest the 886. And so this won't end. Think of it this way. If you're looking for this to end, for the environment to shift dramatically, all of these, Nvidia, ARC, I won't say so much Tesla just yet, but Facebook, Meta, they're all going to have to do these 886s. And then we see. I mean, I think Meta's probably has more to go than any of them. Meta's, has done nothing in recent months. You've basically corrected 50% of the move. Its all-time 886 is at $60. There's nothing holding that from dropping that lower. In the last 6 months, you have tried to rally every month, failed. Again, this is where the lower highs in a downtrend are more important even than the lower lows, because you know there's no buying pressure to even take out the prior month's low. Bring in a downtrend line on Meta, and that's your proposition, folks. That's that. This is how serious the whole deal is. I mean, you're seeing it now. You're down another 280. Great, lows of the day for Nasdaq. This is why, because these have no pattern. They have no confirmation. The ones that do are in a clear return phase. And yeah, there's a crab, okay, on the daily for Facebook doing nothing. Hop level 116. Again, until we get down to that hop level 116, that's probably where this grinding behavior terminates for now. But we're walking the plank across all of these, where you get 1, 2 candles underneath here. It sets off, the whole thing shoots the gap. Hate to say it. Hate to say it. You're just in a hell of a position with having you had the summer to do something, you did nothing. So what does that mean? Selling continues. This whole dynamic that went down over the last 2 or 3 months, are you kidding me? You couldn't get above 172.65 the whole time, and your low was 158 and you're back at 160? It is absolutely mind-blowing, but yes, we're there. I mean, we're back in this environment. It's and it's probably beginning now. There's the weekly for Meta. Okay? This one has a pattern. It has confirmation. It even had a check back. There's the signal. Here's the zone. Let me clean up all these arrows. Where'd you go? Let me remove this. Okay. Look. There's the pattern for Meta that completed back June 21. All right. Confirmation and check back happened essentially in July. And then you thrust it up. You couldn't even get out of the zone above 180. Now you're back down. You're back down, and you coming back down to retest all of your overbought or oversold, excuse me. That tells me when you go sideways, this is clear harmonic dud, people. Look, patterns are great. And if they're going to fail, they're going to usually be like this, where they will stop at your levels, even give you confirmation as a gift, but then you sit there for 6, 8, 10 candles, 12 candles, and you're like, huh? It's not getting out of the zone? Oh, now it's coming back towards me? Yeah, those are cases where it's just a matter of time before that fails, goes lower, wants to kind of swim down here, deeper into the zone. Not opportunity. Here, back in, say, July into early August, yeah, that's opportunity. That's a viable, actionable shot right there with zero follow-through, and any close below 159.74 is an official 3-bar breakdown. And look, plenty of time. Because if that does 3-bar breakdown, from there, it will just continue lower from here on the failure. Let's see. I mean, you're holding your breath. Holding your breath. You're going to come in here on Tuesday. and we're going to see what's up for real. Because look, most of your majors are doing that. Again, here's Tesla on the other platform on the daily or the weekly. There's the daily back to back bearish pattern, at least on that one. Again, 233 on Tesla. Remember, we were saying it was around 280. Still, just 233 is minimum. Probably even lower, 208 on the weekly. And yeah, semis across the board too. Here's Taiwan semi. Okay, deep crab. Look at this. Deep crab. Beautiful. But there's where it completed. That signal is early. And then what happens? And this is another one why we got to look at semiconductors. Bearish HSI in a bullish zone. What does that mean? Go down until you either hit the hop or you form another HSI. Where's HSI on the weekly? Nowhere close. If that's Taiwan Semi, I'm targeting $68 on this breakdown. And we're going to try to get below that 50 level and basically shoot the gap over the next 2 or 3 weeks, certainly by the end of the month. You're coming back down for retest all of these. That's what we need to look at. It's definitely lining up to where the deeper retest, the secondary retest, they all want to go take out the June lows. They all want to retest them at a minimum. Can we get down there and form some patterns or retest some patterns successfully? We'll have to see. But like I showed you with Microsoft and Tesla and a lot of these big tech stocks and NASDAQ in general, write it down, 11,500 on the NASDAQ. Is there a 30-day HSI on BTC? What do I think? No, we talked about that. Look, BTC and all of these are duds. We're given, how many more days do we have to give these? They reacted off the patterns. They came back. They gave us smaller bearish patterns that gave us that reaction. We talked about that. And now they're facing bullish HSI signals that are failing, where it should be going up. You don't enter the trade, no matter what the time frame is. It's great, Vlad. It's well stated. No matter what the time frame, 4 hour, 1 minute. If there's no HSI at the hop or XA, yeah, it's not. I don't think it's actionable. Okay, I think it's absolutely. People try to jump on it, but they don't understand if you don't have that indicator variable. At best, you're going to get a reaction. You don't have anything else that kind of verifies what the structure means. If you don't even have a simple RSI to line up with what the structure is telling you. If the pattern's at a 1618, that's supposed to be the minimum structural limit, but your indicator doesn't link up with that, then they're not confirming each other. So we want to wait for pattern first, confirmation, then go. And that's not what we got. I mean, for Taiwan Semi here, you got pattern confirmation. Sorry, you got the pattern completion there. This signal beforehand, no. I don't consider that relevant to, we want it to the right of that terminal bar. What do we get? We get a bearish reading. And I've always said that's going to add more time to the consolidation phase, if not come back for a full retest. Give me another HSI. That would be the next, if I was bullish, if I thought this market was super cheap. It's going to get, look, it's going to be on a discount. And when that discount bottoms, that bottom probably won't stay there for long. But where is that bottom? I don't think it's at 80 bucks. Maybe it's at 68 or a hair under 68 is more likely that this drops over the next 2 or 3 weeks down to these hop levels and then register some oversold extremes. That's kind of how this September is already coming together. I mean, you're just Miserable first 6 months, right? One of the worst 6 months this market has ever seen. That's statistically proven. From a harmonic pattern perspective, we had a bunch of dud reactions that all started in June. If you were lucky, you got to your target one. Now, in the face of that, tech, crypto, bonds are all making their moves that are just continuing in the predominant trend. Rates are up. Bear market continues on tech stocks and crypto grind. But crypto is grinding, and it's gonna seem painful. But until we can stabilize and break out of any of these, it's you just be real careful wading through all of this. It's definitely something where this environment, a lot of things can get thrown out the window, and they can do that for weeks. Let me wrap up with this thing. Look, XLE and energy, been a real tough call here. Starting to kind of reverse off of some larger moves. Is this was XLE here is what's is ExxonMobil. ExxonMobil, okay. Bring that up. Was that weekly? A retest of that big pattern? Yeah. So ExxonMobil, prime stock to be looking for as a indication of energy, what's going to happen with energy. 96.87. This thing can't get through. What's it going to do? I mean, it's down $7-8 in the past few sessions. Not able to get above 96.87. That means this critical 1618 is capping the rally for now. So energy's not going up. What about UNG, nat gas? Because we know nat gas, there's UNG scraping this deep crab, not able to get above 32.78. Pattern just completed officially 2 days ago. Don't take your eyes off of that, because if everything's going to go down, I mean, if the market's going to go down, everything's going to go down. Let me rephrase that. If the market's going to continue to go lower from here, everything, energy, there'll be the only place to be would be interest rates or tips. Everything will get hit in this liquidation phase, which we're on the edge of. We're on the edge of next liquidation phase. Here we come. That could hurt. And we talked about Boyle with its patterns, and I said this is a little too volatile, I think, for most people. But even with its volatility, you're running up against several patterns where we've said this before. 105, 112. Okay, that is definitely your zone. You did a type 1. You came back for type 2. This secondary test here getting rejected again. So the whole thing about natural gas, 9 on the top side, 6 on the downside, probably is back in business. Your nat gas futures, they look like this. So it gives you an idea of what the energy sector is looking like. There's nat gas on the daily. NYMEX, good old NYMEX. I've got a picture of the NYMEX on my wall. That's how much I love the NYMEX. Type 1, bang. Type 2, bang. You roll over, you close under 875. I'll say this, any close under $9 on nat gas probably caps this for now. I still think this should have broken out. Above $10, there's nothing, and so save that. Just be patient. If you wanted to get back bullish, we would want to get back bullish on a close above 10 for that crazy run to 15. But right now, it's stalling. There's no action here. I've been telling members to lighten up. If not, take some shots at taking a short, which I still feel like is probably the play until we get maybe HSI to come down. Maybe we roll over and HSI comes down and gives us another signal. But that would have to violate this uptrend. Nat gas is stalling. Crude oil is stalling. It's definitely not exploding, and I think I've been right on that one. Other ones been challenging. Here's one or two more kind of updates for some prior three idea comments I put out. Here's Pfizer, and again on the weekly with Pfizer, look at this chart. It's a massive deep crab. Let me change this. Hold on. Let me get the better. Break this down. Let me go back to Pfizer. Pfizer and Moderna. You know why, right? You with me on that? Let's short the hell out of these. You know what's daily trying to roll over, taking its time, but the weekly's clearer story. There you go. I had to clean that up. Big crab pattern. 51.42 has been the big hop level where you're not getting above that. You have confirmation up here around 52.69. Pfizer, folks, and this was something we were saying, longer term options, put options. You go to 34 because it's a type 2. Look, reaction, type 1, confirmation, bang. And look how hard this return phase is. It comes in and slams back, even though this is a major sell opportunity. That return phase, take note of that because we're doing that right now on your tech stocks on bullish patterns. It can be hard, it can be fast, but until you do the retest and form an HSI, okay, you're in that full return phase. And then larger reversal, pretty typical. I say Pfizer goes and trades to target 2 at 34. Plenty of time there if you've been on that one. Moderna has been a little bit different because that overran some of our levels that we were lining up, but still perfect. Let me bring it back in. I think I took that off. mRNA. And these are such chump stocks. I don't want to get into it, but they are chump stocks. mRNA. Come on. Let me do it this way. Great. mRNA on the daily. Even the weekly looks ugly, but that daily was shark pattern. Something I mentioned, I think it was a month ago. And look at this where you have big hop pattern on a bat, but you run into a shark, back down 124, still $10 lower on target 2 for this. And if the whole thing's going to give way, look for this anything under 115 and then forget about it. Then this just becomes a big COVID cycle, which is something that we take out the recent lows on all the markets. They're all going to do the 886. Whatever they were at the COVID low, it's a big 886 reset cycle. That's why the next couple of days and the next several 5-10 points across the board, basically going to seal the deal going into the end of the year. Then I would say Moderna goes to, say, 50, 65 by the end of the year. Keep an eye on that. Keep an eye on that. All right, first person to type in V3 wins a book. Let's give away one more book. And someone wants to look at what the Korean won, dollar, Korean won. Just because Miss Stephanie asked. Probably much like, yeah, look, this is, there you go. 886. Look, do your 886 on all these. Sick puppy, you win V3. You win a V3. Okay. Here's your Korean won, my friend, versus the dollar. It's a bat pattern. Go to your 886 because that's what they're all doing. They're all going to do your monthly, weekly 886s across the board. And we can come back to this on Tuesday because Again, I think I covered it. I think I needed to highlight what we have to watch out for. Okay, that is breakdowns, continued breakdowns that like you're seeing today. All right, interest rates that continue to spike. All right, that's clear. You get the 2-year, the 10-year to get them above 3.5, 3.6, 3.7. Then you know you're in a whole new dynamic with rates, triggering those larger levels. And then even the big industrial stocks that I talked about, your J.P. Morgans, your Goldman Sachs's, like this. Again, really important to look at these stupid, boring industrial stocks and know that you're in a type 2 return. I mean, J.P. Morgan's probably the clearest of all off of the crab pattern. I think there's a couple things. 109. 109, and I don't even want to talk about it until we get down to 109 and form some kind of HSI, which it is, but it's going back in. That's why these next several days could be the wash. And I wouldn't be surprised if we're here on Tuesday continuing to break down to those lower levels. Final number and final wrap up, folks, is the NASDAQ chart. So NASDAQ futures, NQ, all right, when we get to 11.5, that's where I want everyone to essentially be targeting. This decline does not end until we get to 11.5 minimum. It's type 2 return off the ABCD, but that's how severe it is. So absolutely, please take note of what's going on here. All right, maybe there are going to be opportunities, but it's going to be later in the month, later in the year, not now. Certainly not now. And then the crypto grind, I'm pretty clear on that. It's probably done for the year on Ethereum breakdown under 1430. And then you just sit and wait and let it all play out until maybe the end of the year as well. Unless we get some substantial patterns to pop out in front of us, we're in a relative position like we were in April. And go back and see what I was saying in April, because I was not liking it. And I'm not liking this either. But we'll roll with it and we'll find more opportunities. So come on back Tuesday, please. I'm taking Monday off. I think I recommend that everyone does the same. Thanks, everybody. Thanks for a great session. Again, as always, you can reach out to me on the Discord. Go to Harmonic Trader. Get with the basic members page, please. And if you want a book today, you have to go to the Discord. Contact Miss Stephanie. There's the link on the basic members page. Have a great weekend, everyone. We'll see you on Tuesday. As always, go get them. Back here, 12 noon Eastern. Thanks again.